Now, if you've listened to several of these videos so far, before you got to this one, you know that we've talked a lot about the health insurance and the life insurance because those are two really important benefits that federal employees are considering when they're stepping into retirement and certainly when they're leaving the government. But what happens to that great insurance? Are you allowed to keep it? Does it automatically go away or somewhere in between? Today's episode will cover just that. Hi, I'm Kowalik of ProFeds, and welcome to the Fed Impact Podcast, where we offer candid insights on your federal retirement. So no joke, these insurance benefits, even aside from life insurance and health insurance, are super important to federal employees, and we want to make sure that you have an opportunity to be able to keep those benefits or at least know what you're giving up if you make a choice to leave. So we're going to, of course, cover the health insurance, the FEHB program. Next, we have the FEGLI, which is the life insurance, the dental and vision program called FEDVIP, and then the federal long-term care insurance program called the FLTCIP. Okay, so let's talk about the normal rule to be able to keep FEHB. In a normal retirement scenario, so aside from a RIF or early outs or discontinued service or any of that, the FEHB rule is that you must be enrolled on the day that you retire and 5 years prior. Okay, the day you retire and 5 years prior. In order to be able to keep that coverage in retirement, you must meet that rule. But there are some special exceptions to that rule if you're going out under an early out or a VERA, a discontinued service retirement, or a voluntary cash incentive or a VSIP. That 5-year rule can be waived by OPM. In fact, it's an automatic waiver if you're retiring in one of these categories. And although you may have a waiver to meet the 5-year rule, keep in mind you also have to be enrolled in the FEHB plan on the day that you retire. So in the event that you are not in FEHB now and you are offered an early out, for instance, you are not allowed to enroll in the FEHB plan at that time. You already had to have been enrolled, and then they will simply waive the 5-year requirement that you normally would have. Now, a benefit that is closely related to the FEHB program is the flexible spending account. Now, this program, normally, if you retire on January 31st, you are allowed to use the plan up to that point and any eligible expenses that you've had up to that moment in time. But once you retire, the FSA is done. And it works exactly the same way, even if you take an early out, a discontinued service retirement, or the voluntary cash incentive called the VSIP. So important, if you've got a lot of money in your FSA, stock up on your Band-Aids and your rubbing alcohol, you're going to need something to be able to gobble up that money. Otherwise, it vanishes the moment that you step out the door. Okay? All right, next up is FEGLI. So this is the life insurance program. Same rule. You must be enrolled in it on the day that you retire and 5 years prior. There is no waiver by the Office of Personnel Management for the 5-year rule for this plan. If you want to be able to keep this life insurance in retirement, you must have already had it for 5 years prior to the moment that you walk out the door and be enrolled in it on that day. Okay, very important. There is no waiver for this like there is for the FEHB plan. If you have no immediate pension payable to you, you will not be able to keep this FEGLI coverage. You'll have the coverage lasting for an additional 31 days after you leave federal service, and you'll have an opportunity to convert this to a private plan if you choose to do so. But you're going to be paying the full premium for this, and the premiums don't look the same as they do under the FEGLI program. Now, for the dental and vision program, if there's no immediate pension, this benefit will stop automatically when you leave service. So you need to time those things. If you've got, the trip to the eye doctor, make sure that that's happening before you leave federal service so that you can at least use your dental and vision program. All right, next up is the federal long-term care program. You are allowed to keep this program as long as you keep paying your premiums. No matter how it is that you leave federal service, whether you retire, whether you get a pension right away or it's many years down the road or no pension at all, you have the ability to keep your long-term care coverage as long as you continue to pay the premiums. So this program is closed for additional registrations or signups for this plan. So no new people are allowed in, but if you've already got this plan, as long as you keep paying the premiums, you'll be able to keep it. Okay, so boy, there's an awful lot to cover. There's lots of ways to slice and dice all of this material, but insurance, I know, is going to be a big factor for a lot of people, and we want to make sure that you are super, super prepared for what is to come. All right, so hopefully this has been helpful to stay connected to us. Pull out that phone and text the word podcast to 224-444-6144. We'll be connected. You'll have access to all the tools and resources. If you are extra interested in these insurance programs, we've got a slew of webinar replays on these different topics, so feel free to dive in.